started just to respect your time. And we may hear people jumping in. That's okay. This will be recorded. So you can all watch this later if you want the recording. The agent that invited you to this, they'll have access to the recording and the slides. So you can always ask them for that. Or my email's at the end of this, at the last slide, and you can always email me and I can send it out to you. So we're going to go over understanding property taxes. I get pretty basic on taxes, so you understand how it works. This class was really designed for first-time home buyers, people thinking about buying a home or maybe just recently bought a home. They want to understand taxes better. And then we will go into the protest process as well. I'll take you through what that looks like, how to do it. I'll refer you to some companies that can professionally help you if you need help. Usually I have a guest speaker from one of the protest companies talk in this class, but unfortunately he had an emergency come up and can't join us this evening. So you're getting me the whole time, but this is designed for you. So please feel free to unmute yourself and ask questions along the way. And again, for those of you that just joined in, this will be recorded and you can have access to the slides. You can either email myself at the end, I'll give you my email, or the agent that invited you to this, they'll have access to it as well. So let's jump in. All right. So real quick disclaimer. Let me see if I can get this to work. My name's Carlin. I'm the broker and owner of Realty One Group Prosper. This information is coming from 20 years plus of experience helping buyers and sellers navigate their property taxes. I've also personally protested my values almost every single year. I've gone before the ARB hearing panel twice, and I've helped clients even sue the district. So I've got quite a bit of experience. However, I am not a professional. I'm not paid to protest taxes or, like I'm not a tax consultant. So just understand, I'm going to give you what I know, what I've learned over the years, but I'm definitely not a professional in the property tax arena. All right. So what are property taxes? Why do we care about them? And basically it's because we gotta have money to fund community services, public services, or schools. If you're in Hayes County, you may have gotten an email today from the school district for Hayes saying they're cutting 125 positions next year because they don't have the money to pay for it. So taxes are helping pay for things like that, emergency services, public roads, utility districts in some cases. So unfortunately, taxes are a necessary evil, especially in a state like Texas, where we don't have a state income tax and we don't have a state property tax. A lot of people think our property taxes are taxed by the state, but it's not. Our taxes are actually built up. The process is run by the state. The state has a comptroller who sets the rules on the rules that need to be followed on how to protest your taxes. But each county and city and taxing entity have their own rates, and that's where the tax itself is coming from, are those taxing entities, local entities to your area. So we'll go into that in more detail here in a minute. Okay, so we've got two pieces of the puzzle when we're talking about property taxes. The first piece is the valuation of the property, which is determined by the county appraiser, or we call it CAD, the County Appraisal District. So depending on where your property is located, it could be in Hayes County, Williamson County, Travis County, Brazos, Bear, anywhere in Texas, your home will reside, a property will reside in a county, and the value of that property is determined by the county appraisal. The second piece is the tax rate. And a second ago, I said your state, the Texas state does not set the rate. It's the local entities that set the rate. And we're going to do a deep dive into the rate in a second. But it's basically your valuation times the tax rate equals your annual tax bill. However, you may be able to apply some exemptions to get that number down, and we'll go into more detail on that. And again, for those of you that join late, if I go too fast, just unmute yourself if you have questions. This is for you guys, so I want to help any way I can. So please feel free to jump in anytime. Okay, so I want to show you a valuation example. I mentioned two pieces of the puzzle. The first piece is determining what is your home worth. The CAD, the County Appraisal District, Their role is to determine what your property is worth as of January 1st of every year. So here in a few more weeks, we should be getting a notice of value from CAD that tells us what that value has been set for as of January 1st. And the January 1st is important to understand because it's basically based on sales and values that were determined during 2025. So sales, some homes appreciated, some homes declined, depending on the market, depending on where you're located. And the county doesn't necessarily have access. They shouldn't have access to our sales data, real estate sales data. However, it is their job to figure out in their own way, and we'll talk about what method they use, what that home is worth as of January 1st. So they're using whatever data they can get a hold of, and coming up with some kind of value for your home on the 1st. So notices are mailed out typically by April 1st. However, they can go out later. I've seen them go out later. We have the last couple years, we've had legislature that happens very late in the year that affects the tax bills. So then the tax bills go out late, then taxes are due. And so the county seems to be scrambling and running late, getting the values out. Like it's kind of the snowball effect we're seeing over the last couple of years. So the values may go out on the 1st, they may not. It's going to look something like this. They're going to have a value for your home site, which is, or the improvement value, which is your home, your structures, and then the land value. So, and the two together combined become the appraised value. And then we'll talk about the assessed value in a little bit. All right. So the other piece of the puzzle I mentioned a second ago is the tax rate. Depending on where your property is located, it is going to be subject to different taxing entities. So if you look on here, you've got Austin Community College, Hays County Emergency Services District 8, Consolidated ISD, right? Hays County itself, Northeast Hays County ESD, another emergency services district, Special Road district. So for this particular property, each of these taxing units are collecting money through your property taxes to pay for their services, and it's determined by this tax rate. This tax rate is set every year, typically in the summer months, and there are rules that these entities have to follow. They can't just raise the rates on us. Some of them have maybe a limited amount they could raise the rate. And if they try to raise it any more than that, such as city tax, then they have to go through an election process. Our school district, I mentioned a minute ago, Hays CISD, went to the voters last year and asked for more money, and we said no as a county. And now we're seeing layoffs. And I don't want to get into the politics of all that. I'm just trying to explain how it all works. So, had that vote been approved, then for this next year, you would see an increase in the Hays Consolidated School District tax rate, but it will stay the same. So in this example, all of these entities added up, the tax rates ended up come out to 1.826924. And we'll go into what that means and why do I care here in a little bit. Again, we should be seeing the tax values come out April 1st-ish, and then the rates get set later in the year. But it's those two numbers that come together that equal a tax bill. And I'm gonna show you some examples here. So on that valuation I showed you a moment ago, that home is valued at $641,180. The total tax rate for that property is the 1.826924 that I showed you a moment ago. So if you multiply those two together, you get $11,713.87 in taxes. However, this particular home, you can see right here exemptions. This home has homestead exemption, and we'll go into what homestead exemptions mean in a moment. And so that exemption helps reduce the amount of the valuation. So the home over here is valued at 641. However, for Hays School District, we get an automatic 140,000 off the price. So that reduces the value down to $500,000 for the tax rate charge. And that is a recent change in our legislature. This number has gone up twice in the last 2 years. So that is nice. It's a way they're trying to help make homes housing a little more affordable. The Austin Community College also applies a reduction on the homestead exemption. Hayes County itself also does, and the special road district happens to on this home as well. So instead of paying $11,713 with these homestead exemptions, sorry guys, the train's going by. I'm in Buda. Oh, sorry. I'm gonna give it 1 second. It should be gone on me momentarily. Okay. Hopefully it's gotten in. You guys probably didn't even hear it, but I couldn't think about it. Okay. So with the homestead exemption in place on this particular home, the tax is reduced from $11,713 all the way down to $10,063. That's a pretty significant savings. And again, a big chunk of that is the school tax reduction of 140,000 off your value for having the homestead in place. And we'll talk about what does homestead mean in a minute, but just remember homestead's really important. But that's how taxes work. So I just wanted to demonstrate A times B equals C. All right. And this has a plus here, but that should be a multiplication, I just realized, but you get the idea. All right. I want to show you for first-time home buyers, maybe who haven't purchased a home yet. I want to give you examples of how a $400,000 home, the monthly payment could really swing because of the tax rate where the home is located. So for this example, I'm going to show you a $400,000 payment in Manchac, in Creekside Park in Buda, and Sunfield in Buda. Manchac has no city tax. Creekside, but it does have some other taxes. It has 2 emergency service districts and a special road. Creekside Park in Buda has the city of Buda tax because it's in city limits. And then there are some other county emergency service districts and special road districts as well. Sunfield doesn't have city of Buda. However, it has the districts and then it also has a MUD. And so out of my 3 examples here, Sunfield will be the highest in property taxes based on the rate right here for our example. So on a $400,000 home, if all things are equal for all 3 homes, the down payment, the loan amount, principal and interest on 6 and an eighth, private mortgage insurance, because in my example here, we're only putting 5% down. We're going to assume homeowners insurance is $105. The total for this principal, interest, mortgage insurance, and homeowners insurance is $2,635. So what happens when we take that rate, those rates right here, times the 400,000? Now this is without homestead exemptions in place. So these numbers would come down over $1,000 with homesteads in place, but I didn't get that granular for you guys for this example. I wanted to show you just what does it mean tax wise. So in Manchac, that's the lowest tax rate. You're at $7,300 a year for taxes. Creekside Park, you're at $8,700, and in Sunfield, you're at about $11,000. And this is what it breaks down monthly in property taxes, and this is your total monthly payment with this $2,600 over here. So you can see, it's a $300 swing if your property tax rate goes up almost a point. It's a pretty big significant cost. So it's just something as a first-time home buyer you may want to take into consideration. People always say, oh, I hear, this city has lower taxes than this city, or this county, or this neighborhood. It really does vary by neighborhood. It'll matter if it's in city limits or outside of city limits. My mom, for instance, she's on a fixed income and she used to live in San Marcos outside of city limits. Now she lives in Kyle and pays city taxes, and that was a huge change for her. The other huge change was some exemptions that were in place in her previous home. When she moved, she lost those exemptions. She had to reapply for them. It affected the value and taxes really went up. It was a shock. So it's just something to consider when you're out shopping. If you are shopping for a home and you're very payment sensitive and your lender is saying, hey, payments are tight, debt to income ratios may be tight, the tax rate for the neighborhoods, property tax rate for the neighborhoods is something you'll really, really want to look at, because you may need to stay away from a Sunfield and focus more on a Creekside Park as an example to help get that monthly payment down. You can buy more home, right? If your payment, all-in payment is $3,400 a month, that's the most you can do. You'll be able to buy a little bit bigger home in Creekside Park versus Sunfield. And I'm just throwing those out as examples, but hopefully that makes sense. Okay, so the key factors that affect your property tax, just kind of recapping, your value, which is again set by the county appraisal district. Now, real quick note on the value. While people tend to think they want their property tax value higher because in their minds they think that their home is really worth more, that is not the case. That the sales market, real estate sales market, will determine the value when you go to sell the home, right? Whatever's happening in the sales world, homes being sold every day, that determines what a buyer, that helps determine what a buyer is going to pay for your home. It really has nothing to do with the property tax value, other than we need to use that sales data when it's to our advantage to get our tax value down, if that makes sense. So I have clients who are like, "Ooh, I don't want to fight my tax value because that'll affect my resale value," and that's not true at all. A home buyer would much rather pay if I have two homes in a neighborhood with the same tax rate. They're both on the market for 400,000. My buyer is going to want the one that's taxed at a lower value, paying less in property taxes than the other home that's being taxed at a higher value and paying more in property taxes. So that makes sense. A buyer is going to want the lower taxed valued home. That's to their advantage, saves them on taxes. Okay, local tax rate, again, set by the entities. Property type, residential, commercial. That can affect your value as well. Well, I'm not going to do a deep dive into commercial, but if you have questions about commercial, you can always ask me, and I'll kind of share my story in commercial in a little bit. Exemptions or deductions, we're going to talk about those in a second. Those are determined by CAD. Improvements and renovations, or sometimes I should add on here, neglect. If neglect is kind of a harsh word, but let's just say you own a home in a neighborhood where the homes are 30 years old. Your home has never been updated, and all the homes that are selling have been updated. Well, the county shouldn't appraise or assess your home at the same value as those homes that have been updated. And so that can help you get that valuation lowered. And we'll talk about that again in a minute. So all of those factors contribute into the final tax bill. And the entity that's responsible for the tax bill is the county tax assessor. So in October, November, December, you're going to get that tax bill. And that is, again, coming from the county tax assessor, not the appraisal district. The appraisal district determines your value. The tax assessor collects the taxes. All right. So here's the calendar. Again, we are right now over here, well, really down here, waiting for our appraisal district to send the notice of appraised value. So that notice of appraised value is going to be what it was worth on January 1st. And then once you get this notice, this is really important right here, you have 45 days to file an appeal of your value. So you get the notice in the mail and you say, wow, that looks high, or maybe that's high, or maybe I don't know. My first suggestion is to go ahead and if you have a good agent who knows what they're doing, ask them for help. Agents all the time always are offering help during this time of year and say, hey, the county has me valued at this. Should I appeal or not? Chances are you probably want to appeal. It can't hurt to appeal and then it doesn't go anywhere. Like you can try and maybe it doesn't go anywhere because that really is the value. There's no harm in that. But I much rather my clients appeal every year than not appeal every year. And now we're paying way too much in taxes. So you only have 45 days from the time you get your notice to do that appeal. I have so many clients at the end of the year get their bill in October and they say, this is too high. I can't afford my bill. I can't believe this is what it's valued at. Can I fight it now? And it's too late by then. So we have to appeal like starting in April. May through June is going to be the appeal process and when hearings take place, and we'll go into what that looks like in a minute. And then August, September are when those tax rates are being set by those taxing authorities, the special road district, the emergency services district, the city, county rate, school taxes, all those are being set during the summer. And then in October, the tax assessor is going to send out the bill with all of that data, the appraised value and the tax rates, make the bill, goes out in October. So that's how the calendar works every year. And so again, it's just really important. April, get that notice. Let's talk about it. All right. How can I get my taxes lowered? So exemptions are the most important critical thing to make sure you have in place on your home. And there are several different types of exemptions. The primary one that most homeowners are going to use is a homestead exemption. And if you remember a few slides ago, I showed you that the school district tax, they reduced the valuation of your home by 140,000 for a homestead in place. And that almost is about $1,000 savings right off the bat. There are other reasons to file a homestead exemption. There's some protections in there. When we were going crazy during COVID and home values were appreciating greatly in about a 2-year span, our values went up 40%. And for anyone who didn't have a homestead exemption in place, their bills went up like overnight instantly by a dramatic amount of money over those 2 years, like huge amount of money. And unfortunately, without that homestead in place, the county can do that. The county can assess you a 20% improvement in value or a 30% improvement in value if that's what's happening in the market. With the homestead in place, they can only go up 10% a year. So it's really important to get that homestead in place. And we'll talk about how to do that in a moment. You're going to apply through through CAD, the County Appraisal District. There is a generic state of Texas homestead exemption form you fill out and sign and mail in, but you need to update your driver's license and make sure your address for your home matches your driver's license because you've got to prove it's your home, your homestead, and you do that with a current valid ID with the home address on it. Other exemptions may be ag exemptions. So if you own, depending on the county, 8 or more acres-ish, you could apply for an ag exemption, maybe for bees or wildlife or cows or grasses. There's all kinds of ag exemptions. I'm not going to go into them all. The county can help you and work through those. I will, a special side note, just in case you were looking at buying a large piece of property and want to file ag exemption. In my experience, it's a process. You have to go to the county and apply for it and document your use of that property for 3 years at a minimum with that ag exemption or that agricultural use in place. And you have to prove to them that you are using it, you are raising the bees, you are raising the cattle or whatever it is. And then you apply that 4th year for that ag exemption. And what I've been told, I have not done it myself, but what I've been told by clients who have done it is that they're going to immediately try to reject it. And they're going to say, no, something's missing, something's wrong, something's off. We haven't had 3 years of documentation. You need to have your ducks in a row, make sure you have it all documented. And you say, no, here's where I've spent it to you every year. Here's my proof, and make them put that exemption in place. And there's a whole lot more to it, and there are companies that can help you do that. Over 65 exemption, that is a big one. We talked about school taxes. School taxes are the largest taxing entity in all of those entities. So in the example I gave you for Manchac, for instance, the tax rate's 1.86. Well, 1.4 of that, I believe, is the school district tax. So it's a huge amount, or it's 1.14, I think. Anyways, doesn't matter. So what's cool about the over 65 exemption is that it will freeze your valuation. The minute you turn 65, you file this exemption, and they can no longer raise the value of the home on your school taxes. It's frozen, it stays there. So I mentioned a while ago, my mom had sticker shock because she was in this home where the 65 exemption had been in place for like 15 years. And so her taxes were so low. And then we moved her to this new home and she had to file a new 65 exemption and homestead exemption. And it reset the values and cap starting from the time she owned the home. So her taxes went up a lot. Now they can't raise the value anymore on the school taxes for her, but it was a sticker shock. Disabled person exemption and disabled vet exemption, those are tremendous assets. Those will pretty much depending on the disability and the percentage of determined disabledness, it can mean you pay no property taxes at all. So I have a dear friend who's a disabled vet and he doesn't pay a dime in property taxes. It's an amazing benefit for him that he has greatly earned, and so that it's tremendous. So just make sure you know whatever ones you qualify for. Again, you're going to apply for these with the county appraisal district. Let's say you're in a home right now that you bought 2 years ago and you've never filed your homestead exemption. I'm embarrassed to say, but my brother bought a home 3 years ago, no, 2 years ago, and hasn't filed his homestead exemption until now. And I can't believe it. He's just busy. He works a lot and he just never did. So we finally are making him file his exemption. The good thing is he can go to the county and say, this is my homestead. Here's my proof. I've been living here for 2 years. I'm sorry. And they should do a back credit for him and credit him that thousand or so dollars he's due because he didn't have the homestead in place. I've seen counties go back as far as 3 years and credit you for 3 years of shortage or overage that you paid. That you just are going to want to go to the county and talk to them. I would apply, turn it in person and explain it to them, and then have them work with you through it. All right. Any questions on any of that? Again, guys, feel free to unmute yourself if you do have any questions. I'm kind of going fast. I don't want to go fast, but I just talk fast. Okay. Homestead exemption. So when you file your homestead exemption, again, it's going to be your primary residence, and it reduces your taxable value for school taxes and a few other entities as well. And then again, it caps out how much they can raise the value on you every year by no more than 10%. So this is an example of all the taxing entities and which entities are reducing the valuation as a benefit for the homestead. And again, in this example that I showed you guys earlier, it was a $1,700 savings a year by having this homestead in place. So again, if you should have had homestead last year and you didn't, go file it and get that thousand or more so dollars off, depending. It could be more because this home, the value is 640,000. So that's why it's a significant savings. $1,700 is huge. We never want to pay more in taxes than we have to. Okay. So I mentioned before filing protests within 45 days of receipt of value. We're going to get our values pretty soon here in the mail. You're going to file that appeal. The easiest way to file the appeal is online. You'll get a form and it says right there how much we're valuing it at, and then it spells out what to do to file the appeal. So you just log on to their website, you'll create a login, and you'll put in your property ID number, and then you'll say, it's too high. They're going to ask you, what do you think it's worth? And do you have any evidence? You do not have to present your evidence when you file that appeal. If you do have evidence, for sure, go ahead and do it, but you don't have to right then. They do ask for it, but you don't have to. You can submit it later. When you file the appeal, what I recommend if you've got time is to, again, talk to an agent, the agents that referred you to this class or myself. We can pull value and look really quickly and be like, yes, appeal, and here's the number we think it should be worth. And then you can put that on there. And we should be able to give you some evidence to use as well. But you want to get that. The key is getting that appeal in, whether it's correct or missing information. You just got to hit that 45 days. Otherwise, if you go beyond 45 days and miss your window to appeal, you're SOL for that year. So that's the most important thing. We'll talk about, different ways to appeal and get into all the details here in a minute. Okay. Or I guess we're going to get into it right now. So what does it look like for appealing, protesting? You're going to do your notice. You're then going to receive correspondence back from the county appraisal district. And they're either going to say, hey, we like what you said in your appeal. We liked your evidence. We like the value you gave us. Maybe you bought the home last year and you paid less than the value, right? You can just send them your closing disclosure and say, hey, CAD, you value my home at 450,000, but I bought it for 385. Here's my closing disclosure that proves I paid 385 for it. And they should reduce the value instantly. So you may get a letter back. I say letter, they're going to email you more than likely. They're going to email you back and they may make you an offer. Let's say they valued you at 450. You said it's worth 400. They come back and they say, oh, we believe now 430 based on what you said or whatever. We'll offer you 430. You can accept that 430 right then and there. And you can say, great, I'm done. Perfect. Or you send them in your closing disclosure and they reduce it. However, if they come back and say, nope, we feel strongly in our value, they're going to give you a notice of hearing, and you have the right to attend the hearing in person, online, or through emails, or on phone, in person, online, on phone, or through email, or through mail, not emails, mails. We'll go through that in a second, but you're going to have a hearing. And in my experience, I have been through two hearings, and they made offers along the way a couple times before I got to the actual hearing board. So just know it's like their first offer may not be their final offer. They usually try, once you get to the county office, they'll try and meet with you and settle before you go in front of the board. But just note, like it's not carved in stone while you're going through the process. You have to accept their final decision, or you don't have to accept it. At some point, they're just going to tell you what it is if you're still fighting it. And then you end up suing them if you don't agree with it still at that point. But you've got time and you can work your way through the process. So you receive correspondence from CAD, notice of hearing. You'll attend the hearing if you don't, if they didn't give you an offer that you like, or if you don't, or they didn't give you any offer, then you're going to go to this hearing. At the hearing, again, you have the right to attend in person, by phone, or affidavit. They have a very strict process of how it works. Basically, they're going to swear everybody in. You're going to present your case. They're going to present their case. We'll cross-examine. We'll do some rebuttals. And then they're going to have a discussion and closing arguments. Now, in my last hearing, I personally had a very unique situation where I had built a custom home in kind of a track home community, and they were trying to value my home as a custom home as if it was on large acreage. Well, my custom home isn't worth resale wise what you could get if it was on acreage in a custom home community because it's in a track home community. It's not the same thing. And so I had a very difficult case because I didn't have really good black and white evidence. I've been selling homes for a really long time and and I spoke to as much as I could, but it was a very unusual case because I had such a unique, unusual situation. And we went back and forth, the board and myself, like I wasn't taking no for an answer and leaving. And they finally just got frustrated with me. And so someone on the hearing board panel finally said, let's make her an offer so she'll leave. And they made me an offer and I just finally took it because I realized I'm like up against a wall. They don't care about my position. Or it's not that they don't care, they just didn't understand it or see it. I just didn't have good evidence because it was such a unique situation. Anyway, so they finally made me some kind of offer to leave, and so I took the offer and I left. But most of the time, it's not that difficult. Most of the time, if you get to the hearing level, which again, they may make you offers along the way, and it may be better to take one of those offers before you get to the hearing board. But if they're so egregious and the value is so off, then you may absolutely want to present your evidence and get in front of them. The goal is I think it's on my next slide. Yes. Okay. So step one, if you are going to go to the hearing, you want to request their evidence. Now, in the last 2 years, or let me back up, before 2 years ago, especially for Hays County, the evidence would be very specific to the property. They would say, here are the comps we're using. This is how we came up with the value. Great, that's pretty easy to understand. Well, the last 2 years, Hays County, and I can't speak to other counties, but Hays County in particular has just been vomiting pages and pages and pages of sales data and saying, here's our evidence. And it's not specific to the property. They don't highlight the ones that apply. It's really interesting, the strategy. I don't quite understand it. We'll see what they do this year. But we do want to get their evidence. And our goal is really to prove that their case is incorrect, not try to force a new opinion on them. So in my case, when I went before the hearing, I had such a unique situation. I was trying to tell them they're wrong and here's why I'm right. And that's a difficult stance. What we really want to do is say, we see your evidence, but you're wrong and here's why. We want to prove their case wrong. The county appraisal district uses mass market appraisal method, meaning that they will typically assign a subdivision kind of valuation for the land and then a multiplier for the neighborhood. And based on the square footage, basically, they plug it in and that's how they come up with their number. Now, that number for the same floor plan in the neighborhood, the valuation can be different on different homes because one home has fought and kept their values down, and the other home has never kept their values from rising. But other ways we can get the values down is, like I mentioned before, what if a home, like all the homes selling around me have been updated and my home's 30 years old and it hasn't been updated ever? Well, my home, if I went to go sell it tomorrow, is not going to get anywhere near what those other homes have sold for. So I can prove and show documentation that my home hasn't been updated. It doesn't have a new roof. It doesn't have, the granite countertops and the hardwood floors that everybody else has. I can document the condition, and that should immediately get the value down. That's one of the easiest protests we can do. Or if your home has had damage, maybe damage from a storm or foundation damage that you haven't been able to repair, or, there's lots of determining factors as far as the condition goes that can keep a home valued for less than what a home in really great condition is going to sell for on the open market and be valued out by the county, if that makes sense. So again, we're trying to understand, how did they come up with the value for my home? I first always recommend to clients, let's look at other homes like yours in the subdivision and see what they're being assessed for. What value are they being given? And are they all kind of the same value? Or maybe yours is exceptionally high and everybody else is lower. That's an easier case to fight. They have to be fair in their valuation. They can't, value one home higher than others if they're all similar. So let's keep going here. I can ramble on forever. All right. Basis of appeal. I've kind of talked about it. So the first basis of an appeal is market value. We look at sales last year leading up to January 1st, and we probably will see values come down, especially in the Hays County area, Travis County as well, most areas. Some subdivisions have appreciated. I've been in multiple offers in a couple areas, but overall, we've seen values come down. And so if the appraised value comes out in April and you get it and it's gone up, we definitely want to look at that. We probably want to fight based on market value. Talk to your agent and get those comps, they'll help you. Unequal value, I mentioned it a minute ago. We may want to look at similar homes to yours in the neighborhood. How are those assessed? If they're assessed lower than yours, that's a pretty easy fight. Or factual errors. Maybe the square footage is wrong. Maybe there's damage to the home. The home hasn't been updated, like I mentioned. Those we can document with pictures and submit it, and usually they'll drop the values pretty quickly. Factual errors are very, very easy to get reduced. Unequal value is also pretty easy to get reduced. Market value is where we kind of sometimes have debates. Or what we've seen lately is homeowners think their home should be worth less, but maybe the comps aren't there to justify the less. So any questions on any of that? Let's talk about more about protesting. So again, I was supposed to hand this over to my professional protester, but he had an emergency and couldn't make it with us tonight. But these are a few of the companies. I have personally worked with Texas ProTax and Gil Denson and Company. But Home Tax Shield and Ownwell are also two very popular ones for the area. But before you hire one of these companies, I would say talk to a really good agent, ask for some help. I have a client last year who just hired Ownwell, and their pitch is, you don't owe us anything until we get your bill down, and then you'll owe us a fee based on the percentage of how much they got it down, right? And so a lot of people think, oh, well, there's no harm in hiring them to do it. Except that if you truly have a case and it should come down, then we should be able to do it and not have to pay anybody to do it. Like, you should have a good agent in your pocket to help you do that. And you shouldn't have to pay anybody. Where you want to pay people is, for me, for example, I mentioned commercial earlier. I owned a commercial office for 12 years. Commercial doesn't have a homestead exemption protection in place to keep values from going up. And one year, my value, and this was a long time ago, my value was like at 230,000, and then overnight it went up to like 500,000. I was like, oh my God. And so I hired a professional company to help me fight to get that down. That was well worth it. Bigger, expensive homes, million plus, you may want to hire a company like Gil to help you get those down. The problem becomes with the higher end homes, when you have lots of factors that can affect the value on those homes, the amount of land, whether you have outbuildings, guest houses, pools, those kind of things, those can all really affect the value greatly. And so if you don't know what you're doing, you risk leaving money on the table. So that may be where it's really a good idea to talk to a professional company. I mentioned early on, I had a client once who even, went before the hearing, still did not accept their valuation. He had a very unique property and very expensive, lots of land. And he wouldn't accept their findings in the hearing, and so he ended up suing the district, and it dragged out for quite a long time. So it can get, it can become a really big deal. But that again, it was a very expensive property. We're talking a lot of money. In the case where you live in a normal, first time home buyer, maybe move up buyer community, it shouldn't be that difficult, and we should be able to help you with it. So at least start with your agent, and your agent may say, oh, no, you need a professional, but don't pay for it unless you have to. Okay, I'm going to go off on a couple quick tangents for my first time home buyers real quick. So hang in there with me for another few minutes. An important note on escrow accounts. When you put money down on a home, if you're putting anything less than 20% down, your lender is going to require you typically to escrow your property taxes and insurance. And an escrow account is setting up like a side savings account where the bank has access to that money and they collect a monthly payment to that escrow account every month, predicting what they're going to need to pay for your property taxes and your insurance every year. And the problem is they're projecting what they're going to have to pay, but they don't actually have the bills to pay it yet. And so at the end of the year, they'll do a reconciliation. They will have collected all money from you all month long, all year long, and then they've paid out your insurance bill, they've paid out your property taxes. And then at the end of the year, they reconcile it. And what's happened a lot lately is that there's a shortage in the account. There's not enough money to go on and keep it going for next year. And so then they have to assess it and bill you for the shortage. And they may either take that shortage and divide it out over the next 12 months and add it on to your next year's payment, or you may want to pay it all in a chunk. But we want to avoid that if we can. We want to pay attention to what's going on in our escrow accounts, especially if you're buying new construction. New construction is where we see the biggest um, freak out in buyers, because sometimes taxes are based on a lower amount starting off on a new construction home, and then the next year they're based on that January 1st, and it's reassessed and the value may have gone up greatly, and now your taxes are short and it's all going to change. Like I've had a couple clients lately, they weren't my clients when they bought the home, but they're my clients now. They want me to sell because their property tax rate, the escrow account adjusted like $600, $700 a month, and they just can't afford to do that. They can't afford to make that shortage difference up. So it's really important to pay attention to what is my lender collecting in taxes? What are they predicting my taxes should be for the year? Is that accurate or not? And if it's not, then set a little bit more money aside so you have that money when it's short at the end of the year to give to the bank and say, no, here's the money for my escrow account. Pay it. Don't add it. Don't increase my bill for next year. I should be good. The bank has to keep and wants to keep a 2-month cushion in your escrow account at all times. They're not allowed to collect more than that. So when they reconcile at the end of the year, they're going to say, oh, we have extra money. We didn't use it all. Here's some money back. Or they're going to say, oh, we had the right amount. We're going to keep going on this trend. Or they're going to say there wasn't enough and we need to increase your escrow account. I'm going to show you some examples here. So this was one that happened to a client, I think at 24, if I remember correctly. Basically, it said due to your escrow expenses, you were short and your payment is going to have to increase. And so what happened was they expected to pay $1,600 for insurance, homeowners insurance, but homeowners insurance has gone up to $2,600 for this house. And we saw this a lot over the last couple of years. Homeowner insurance and premiums have been going up and up and up and up and up, 30, 50% premium increases. It's crazy. And so that's taking out a huge amount of the escrow account. The other issue on this home is that they estimated property taxes to be 9523 and they came in at $10,877. So they thought they'd pay 11,000 out of escrow and said they had to pay 13,500. So now we're short the money and we're going to have to increase it for next year. The problem is you've got your normal escrow payment that was 931. It's now going to 1125 based on these new numbers. And then you're also paying the monthly shortage on top of that. So that's a pretty huge increase for a first-time home buyer who's living on a budget. That's a shock to the system. And so we're just trying to help you plan for those so that you're prepared. Any questions on that? We only have a couple more slides, guys. Hang in there with me. All right. Common property tax mistakes, ignoring those assessment notices. So again, April 1st, they're going to start hitting the mail. If you don't see it in the mail, go on the county website. You can pull up the notices, the valuations online. Um, you have 45 days from the time that notice goes out to file the appeal. Hopefully, we're going to see the county values coming down this year. Well, for the most part, they came down last year, and I expect them to come down again this year. Missing deadlines is so costly. So just make sure you're paying attention to the deadlines. If you're unsure, talk to your agent or call the county and talk to them. But it's really important we don't miss those deadlines. I can't tell you how many clients are crying at the end of the year going, I can't pay these taxes. I need to fight this value. And it's like, well, we can fight it again in April, but we can't do anything about last year. It's too late now. Not claiming exemptions, please, please, please make sure your homestead's in place. Um, Forgetting to update records. So this says after renovation. I don't know that I necessarily am going to go tell the county I've updated my house, but I'm certainly going to tell the county if my home hasn't been updated and everything else around me is selling but is updated. So make sure you're letting them know if you haven't been able to, fix your roof from a storm damage. So during snowpocalypse, right, a lot of homes got damaged. That affected value. So that could lower the county's assessed value for you. Paying the wrong amount is a killer. Penalties can get costly. And not checking for errors on the bill. Don't assume that the county's perfect and everything's correct. Do the math and make sure it's right. Make sure that when you file your homestead, that the homestead gets put into place and they're applying those exemptions accordingly. It's really important. Okay. Last slide. You made it through. Any questions? If you guys want the slides, feel free to email me. This is recorded, as I mentioned, so if you want access to it, the agent that invited you to this, let them know, and they'll send you a link. We'll have it available as of tomorrow for you guys to watch later or share with friends, whatever. I hope it was helpful. Thank you all for joining me. And if you have any questions, you're welcome to stick around and ask questions. Otherwise, I will let you guys go.
I had a quick question.
Sure.
The one, hopefully more, right?
Mhm.
The one deal that I closed this year, just tell that home buyer to just look out for what you just mentioned, the homestead, if you filed it,
So
and
they need
then
to file their homestead if they haven't already done so.
that's what I told them.
Typically, as an agent, I always tell my buyers from last year, file your homestead. It used to be that we had to wait till January 1st to file our homestead, but now we can file our homestead immediately. So, like right after closing, I tell my clients, go change your driver's license address. As soon as you get your new driver's license in, take a copy photo of it and use that to apply for your homestead right away. So make sure they've got their homestead in place. And then in April, like the first week, second week of April, call them and say, hey, did you get your assessed value? What did it come in at? And if it came in higher than what he paid for the home, he should be able to appeal it and send in his closing disclosure and say, hey, you valued me at 500, but I paid 460 for it. Here's proof I paid 460, and they should lower it down immediately.
Okay, perfect. Just want to make sure I understood because I know I came in a little bit late, but
Yeah,
thank you.
nope, you're good. Absolutely. Any other questions?
I had one a couple of times. You mentioned the differences in valuation of the home depending on whether it had been updated, flooring, cabinetry, or damage to from storms or the flooring. What kind of proof, I guess, do you submit for making an argument on those grounds?
So what I would submit or any photos you have, or let's say insurance adjusters come out and noted and did a report for you that said there was damage to a storm or whatever. Any kind of documentation you have, but photos will absolutely suffice in this. So when I do the notice of appeal due to condition, I'll include the photos. I'll write up a little summary that says the homes that sold last year in my neighborhood, most 90% of those all had been updated, had new roofs, new ACs, or whatever it is, and have your agent help you get that information. But my home, I haven't been able to update it. I haven't replaced the AC. It needs a new roof. Whatever you can, document. And then ask your agent to help you as far as an adjustment of value. I would, if you don't know, a good rule of thumb is about a 20% reduction in value. Now that's a huge reduction in value. They're probably not going to give you that much off, but they will come down. So the idea is we ask big and get hopefully as much as possible from them. And if you have like any specific documentation, so I have a client who had foundation issues and she got a bid for the foundation. And so she had documentation that the home was at a level, the bid was $50,000. She couldn't afford it. And so she submitted the bid and proof that it's at a level. And then they took that 50,000 off the value.
Okay, thank you.
Absolutely. Any other questions? All right, guys, thank you so much for joining me. I hope this was helpful. If you have any questions, something you think of later, feel free to email me. And again, if you want the slides, let me know. I'll send them. Have a good night.
Thank you.
Bye-bye.